The S&P Global Manufacturing PMI is an important economic indicator that reflects the performance of the global manufacturing sector. It is a comprehensive and widely followed index that provides a snapshot of the health of the manufacturing industry across various countries and regions. The index is based on surveys conducted with purchasing managers in the manufacturing sector, and it is part of a broader series of PMIs published for individual countries and regions. What is the S&P Global Manufacturing PMI? The S&P Global Manufacturing PMI, formerly known as IHS Markit Global Manufacturing PMI, is a composite index that aggregates the manufacturing activity across major economies. This index is designed to provide an early and clear indication of the global manufacturing sector's health by tracking key metrics such as production, new orders, employment, and supply chain conditions. How the S&P Global Manufacturing PMI is calculated. The S&P Global Manufacturing PMI is based on monthly surveys sent to purchasing managers in the manufacturing sector from over 40 countries. Purchasing managers are asked about their business conditions in areas like new orders, the number of new orders received by manufacturers, production levels, the volume of goods produced during the month, employment, the number of employees in the manufacturing sector, supplier deliveries, the speed at which suppliers are able to deliver raw materials and goods, inventories, the amount of raw materials and finished goods being held in stock by manufacturers. The PMI is calculated using a weighted average of responses to these questions, resulting in an index value that ranges from 0 to 100. Above 50 indicates growth or expansion in manufacturing activity. Below 50 signals contraction or a decline in manufacturing. Exactly 50 indicates no change compared to the previous month. Why is the S&P Global Manufacturing PMI important? Global Economic Health Indicator. The S&P Global Manufacturing PMI provides an early indication of economic performance, especially in the manufacturing sector. Manufacturing is often considered a leading indicator of economic activity. So the PMI can signal the direction of the broader economy in both the short and medium term. Business cycle analysis. As manufacturing activity tends to lead economic growth and employment trends, the PMI is crucial for understanding where economies may be in the business cycle. Strong PMI readings suggest that global economies are expanding, while weaker readings could signal an economic slowdown or contraction. Global trade insights. Since the manufacturing sector is highly interconnected globally, the S&P Global Manufacturing PMI offers valuable insights into the state of global trade, supply chains, and commodity demand. A strong PMI might indicate that demand for raw materials, like metals and oil, is rising, while a weak PMI may indicate falling demand. Market and investor sentiment. Investors closely monitor the S&P Global Manufacturing PMI to gauge market sentiment and anticipate market movements. Strong PMI data can lead to confidence in stocks, while weak PMI readings might lead to market volatility or lower expectations for corporate earnings. Monetary and fiscal policy decisions. Policymakers, including central banks like the Federal Reserve, the European Central Bank, and others, use PMI data as part of their decision-making process. A weak PMI can prompt policymakers to adjust interest rates or implement stimulus measures to counteract economic slowdowns. How is the S&P Global Manufacturing PMI used? Global trends. The global PMI aggregates data from a wide range of countries, making it useful for identifying global manufacturing trends. A broad-based increase in the PMI across major economies may signal that global manufacturing is in expansion, while a broad-based decline could suggest global challenges. Comparative analysis. The S&P Global Manufacturing PMI allows for comparisons of manufacturing activity across different regions. For example, it can provide insights into how manufacturing is performing in key regions like North America, Europe, and Asia. Forecasting. Economists and analysts often use the PMI to forecast trends in GDP growth, industrial production, and employment. PMI data is typically released before other major economic data, so it provides an early glimpse of potential changes in economic conditions. How to interpret the S&P Global Manufacturing PMI. PMI above 50. A PMI reading above 50 suggests growth or expansion in the manufacturing sector compared to the previous month. The higher the PMI, the stronger the expansion. For example, a reading of 53 indicates that global manufacturing is expanding, with more companies reporting increases in output, new orders, and employment. PMI below 50. A reading below 50 indicates contraction or decline in the manufacturing sector. A PMI of 45 suggests that global manufacturing activity is shrinking, with companies seeing lower demand for goods and reduced output. PMI of 50. A PMI of 50 signifies that there has been no change in manufacturing activity compared to the previous month. It suggests that the industry is in a state of balance, with neither growth nor contraction. Recent trends and importance of the S&P Global Manufacturing PMI. The S&P Global Manufacturing PMI is released monthly, offering a timely snapshot of the health of the global manufacturing sector. It is particularly important for tracking supply chain disruptions. The PMI can reflect issues like supply chain bottlenecks, shipping delays, or material shortages. Anticipating economic shifts. A weak or declining PMI may signal an impending economic slowdown, while strong PMI figures might indicate recovery or expansion. For example, post-COVID-19 recovery. Following the pandemic, the PMI was closely watched to assess the pace of economic recovery. As global manufacturing activity resumed, the PMI data helped gauge whether recovery was V-shaped, quick rebound, or U-shaped, slower recovery. Supply chain challenges. In recent years, issues like the semiconductor shortage or logistics disruptions have affected the PMI, especially in key sectors like automotive manufacturing and electronics. Regions covered by the S&P Global Manufacturing PMI. The S&P Global Manufacturing PMI tracks data across more than 40 countries, including the United States. U.S. manufacturing is a major part of the global PMI. China. As the world's largest manufacturer, China's manufacturing performance has a significant impact on the global PMI. Eurozone. The Eurozone manufacturing sector, which includes countries like Germany, France, and Italy, is closely tracked. Japan, India, and other key countries. The PMI also includes countries in Asia, Europe, and Latin America, providing a comprehensive picture of global manufacturing trends. Importance for investors and businesses. Investors. The PMI data helps stock investors assess potential market trends and the health of the global economy. A strong PMI might drive investor confidence, while a weak PMI could signal caution. Businesses, companies, particularly those in the manufacturing, logistics, and raw material sectors, use PMI data to inform strategic decisions about production levels, inventories, and investments. Conclusion. The S&P Global Manufacturing PMI is a vital tool for understanding the global manufacturing landscape. It provides a clear and timely indication of global economic health, offering insights into growth, contraction, or stability in the manufacturing sector. With its broad coverage and monthly updates, the PMI is widely used by policymakers, economists, investors, and businesses to anticipate changes in the economy and make informed decisions.